Hey, welcome everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, it's Barry Saywitz. Hey, Barry.
Hey, good morning, Paul, and good morning to all of you out there, our listeners and our viewers. If it's Tuesday, we're talking a little real estate. I am Barry Saywitz, president of the Saywitz Company and managing partner of Barry Saywitz Properties. And if it's one thing I've learned in my 30-plus years of doing this, it's to look at both sides of the equation, surround yourself with experts who can give you good, solid advice, and then take that advice and run with it. And so for today, we're going to try and give you some words of wisdom and some advice to take with you. I'm excited for our show today. Before we get going, I want to do a shout out to a couple of folks, to all the kids out there. If you haven't gotten your costume for Halloween, go get it. It's closing in on you. And then for all the adults out there, if you haven't registered to vote, my understanding is today's the last day to be able to do that. You can do it online, make your voice heard, and go out and vote. So with that said, I want to welcome our guest, Chairman of the Board, CEO of Farmers and Merchants Bank, Daniel Walker. Thank you for coming on and being here with us today.
What a great day to be here. Beautiful Southern California.
Yeah, and it actually cooled off a little bit. And for those folks in other parts of the country that don't know what we're talking about, it's about 60, so it's cold for us, but we'll muddle through it. So I want to start with, I guess, your background and your history, because it's really a very interesting story. There are books written about it. Your great-grandfather started Farmers and Merchants Bank back in the early 1900s and has carried on the torch all the way down to you in terms of growing the bank, running it, and being part of the fabric here in Southern California.
Very correct. Daniel Walker, fourth generation to the Walker family, to Farmers and Merchants Bank, fourth CEO. C.J. Walker, my great-grandfather, as you expressed. 1907 was the greatest day of November 23rd, 1907. We're coming up to another celebration here at 115th year or anniversary. Indeed, we enjoy Southern California. We've committed ourselves to the Long Beach, Los Angeles, Orange County. Have 11 different offices now in Orange County, and continuing to expand with another 2 or 3 in the coming year.
Yeah, and really you have seen, and your family has seen, and the bank has seen, all kinds of growth here in Southern California, dynamic expansion through the war and recessions and all these other things. It would take us days to go back and retrace all of those things, but I guess I want to rewind a little bit back to the recession, the last time the economy struggled along. We'll take it forward to today and then sort of get your thoughts in terms of where we think we're headed going forward. We're in a little bit of a tumultuous time, and that it's different than it was before, and everything is not all rosy. And as we both know, nothing goes up forever. Your house doesn't go up forever. Interest rates don't go up forever, and they also don't stay low forever. And so if we rewind back to the recession, where everyone's house was not worth what they thought it was, and nobody was making as much money as they thought they should, and things were really not doing well, the ramp up in the recovery of the recession back to where we were pre-COVID was pretty amazing in terms of the growth and the dynamics of the economy as a whole, would you say?
I would agree with those comments. Although you mentioned the recession, and I've been in banking since 1975, so I'm not sure if you're talking about the 70s, 80s, 90s, 2000, 2010.
We could do a couple other shows, one on each of those if you want.
But I think what I'm trying to identify, and you said it clearly, Barry, is that we do have an economy that runs high and low. It's in a circle. Fortunately, we live in California. An extremely strong economy here in Orange County and Los Angeles. And from that standpoint, we are saved from some of the greatest disasters that we see across the United States. But yet we have to be prepared for an economy that might slide off.
Yeah, and what I've seen, at least from my own experience, is the dynamic of the business types here in Southern California far greater than really any place else in the country that I've seen. You have tech, you have med, you have aerospace, you have real estate, you have tourism, all kinds of different dynamics which help If one is struggling, the other seems to prop it up. The other thing is that Southern California in particular seems to go up higher and fall farther than other places as well, and that's the good and the bad of it.
There are areas in California that have the ups and downs are greater. I don't consider Orange County and Los Angeles to be those two locations or the ones that slide the largest. So being here local gives you the greatest chance to pick up when you are cash strong, when the economy slides off a little bit or prices slide off a little bit, and then to be smart and use your wisdom when the market's at the top, not to buy.
Yeah. Yeah, and your bank historically is fairly conservative bank, and one of the strongest in Southern California, and certainly one of the oldest. What is sort of the business plan in a general perspective from the bank at this point going forward?
Yeah, I think consistency is what we are noted for. In 1907, C.J. Walker started the bank on the taglines of strong and conservative. We have maintained those taglines and added on friendly as well. I think that the keys to Farmers and Merchants Bank is that we want to be there for our long-term customers, and we want long-term relationships. And when the economy is up or down, then we're driven to serve you with those lending dollars, with those accounts, and with the greatest patience in relationship to your particular business or your particular purchases that slow down, and you need patience for that economy to come back around so that you can get on board again.
Yeah, and this is not, your bank is not a situation of I run it up and I sell it. I mean, you're in it for the long haul, and you'd like to think that your clients are with you for the long haul and vice versa.
I'll be glad to delight you with the fact that I am fourth generation. We already have the fifth generation in place, ready to come on board. They're still asking for my job every day. I haven't quite given it up. And yet just last week, the sixth generation walked into my office and said, "Hey, I just got hired."
Ah.
So that was an amazing event, very pleasing, great smile from me, and there we are going on for another 100 years.
And so you do have a succession plan, it sounds like.
Indeed.
Yes. So in terms of the economy as a whole, we could talk about the recession, but it gives me a stomach ache. And so I want to try and focus on some more positive stuff. But pre-COVID, markets chugging along, economy's chugging along, real estate market chugging along, people feeling pretty good. And then all of a sudden COVID hits. What was the reaction from your clients in terms, I mean, not only the PPP, but just the struggles with layoffs and what do I do, and I'm basically shut down. How did the bank, in a general sense, sort of react to what was going on at that point?
In 2019, I was finishing up the year thinking to myself in January of 2020, boy, it's going to be a really quiet year. I'm going to have to really expand my thinking and expand my focus in order to push the bank forward, because the whole economy is kind of just running on its normal behavior. Then we had March, we had the COVID. PPP was one of the interesting presentations by our government. They called it a great opportunity. We believed them. We took it on. We did over 7,000 loans to the local communities with the greatest effort of saving businesses and focusing on what the community needed at that particular time. We're so pleased with the effort that we provided there. Almost $1 billion from Farmers and Merchants out to the communities in order to build and save and allow those folks to move themselves along and keep their business running.
And in a hurry, right? Because this was not take your time and get this money out. It was, here it is, go get it.
We were one of the first banks to be able to make those loans. At one point, Farmers and Merchants was making more loans than any other bank in the state of California.
Interesting.
Because we were set up and we went right after it. I think the greatest part of that was I was visiting one of our sites that was in charge of putting these loans together. We had over 250 personnel in the bank, of which we only have 700 in the bank at that particular time. So that's a great number. Almost a third of our employees were dedicated to doing these loans. And the fun part that I liked about it was that as the funding part ended, the smiles and the pleasures that they all had in their hearts that they got a chance to help somebody save a day.
Yeah, and in many instances it did.
Yes. No, I know that for sure.
Yeah. And so now COVID goes, and now I'm going to try and get on an uptick. So I'd like to believe we're past COVID, although it's not gone. It's still prevalent. Go get your booster if you want one, and if you don't, you probably didn't get it before anyway. But but you can't let that run your life, and I think that's what everybody sort of resolved them to, and that I've got to go back to doing the kinds of things that I need to do to be able to get my own personal life in order, and then from a business perspective do the same as well. And so now you start to come past the COVID, and now you got new challenges with the economy, with rising interest rates, with war, with supply chain issues, with runaway inflation, all kinds of fun stuff, right? It's enough to have you want to go get a drink early in the morning. And so now, where do you see the bank's role in terms of supporting its customers and its clients and the community in this environment?
I think that one of the benefits that we derived over the last 3 years was the greatest growth in technology. It came very easy for the bank, and we expanded ourselves there. We are focusing on relating to the customers on an individual basis. Personal relationships are really very important to us. And one of the parts of that is getting all of your employees back to work. I see so many companies suffering with encouraging their folks to come back to work. It isn't so difficult for farmers and merchants. And the reason is because of the synergy that our employees have among themselves, that we use each other in order to solve all these problems that are coming to us through the public. And as the economy starts to turn, and I have to believe that unemployment is going to go up, as these interest rates are going to go up another 75 basis points and then another 50 basis points, according to the rumors from Federal Reserve.
Yeah.
That we're going to need to be there to serve on all sorts of, or I should say, to serve on all the fronts.
Yeah, and not to put words in your mouth, but I mean, the take on it is interest rates go up, corporations have to tighten the belt. They lay off the excess of whatever they feel like they don't need, which then creates unemployment, which then dovetails to this whole wage run up, and then dovetails back to, I think, the real estate world, because if people don't have a job, they struggle to pay their rent. They can't pay more rent. Inflation doesn't get solved. Gas prices don't come down. I still have a high cost of living, and I have no job.
Let's not describe too much disaster here.
No, but it could happen. And then I guess the question is, but let's focus back on the interest rate piece of it, because that really is, I think, what then sort of dictates other events that will follow. And so you're pretty convinced, as are others, and as am I, that interest rates are going to go up between now and the end of the year.
I think interest rates will climb. I think that the Federal Reserve knows that that's going to push up unemployment. And I like to think that the Federal Reserve is always looking in the rearview mirror instead of looking out the front windshield.
Yeah.
And they get down the road and they said, oh my gosh, we've gone too far. Well, from our perspective, we think the Federal Reserve may have gone too far already, but yet they're going to go further, which will drive the economy down a little bit more, which will drive prices down a little bit more. But on the positive side, it's never forever. As interest rates went down to 1%, or for the banks, we went down to 25 basis points.
Yeah.
It's not down there forever, and so now our interest rates are climbing, and the bank will react slowly to those interest rates, and we will encourage higher investments within the bank, savings accounts, CDs, and so forth, and that's the way that we have to start serving those individuals that are on hold.
And so the rise in the interest rates, from your perspective, What does that do to, let's say, the residential market in a nutshell? Does it drive prices down further?
Well, it doesn't, it depends on what market you are. If you're in Newport Beach, it's different than if you're in the city of Orange, or if you're out in Riverside.
Yeah.
So every little perspective of California and its market is different. Overall, what it does is it doesn't allow your buyers or the number of buyers on any individual property to be at the same quality or quantity than we've just experienced here in the last few years or the last months.
So it takes a number of buyers out of the market because some people just say, hey, I can't afford it, or I can't qualify.
Can't afford, can't qualify, not confident that the market is going to be the investment that they're looking for.
And I would add to that is, if my perception is that tomorrow's price relative to the real estate is less than today's price, then I just wait and see, which then further drives the market down because less people in the market, and it's a self-fulfilling prophecy.
Agree.
Yeah. And so then let's shift gears for a second to the commercial side, because it's a little different ball game on the commercial side, because the commercial side, the value of the property typically, depending upon if it's owner user or not, is derived from the rent that's coming in from the property. And so as the lender who is going to lend to a borrower like myself on a particular piece of property, how does it go in today's environment, and what steps are banks in general, I guess, and you can talk about yours as well, is there a tightening of the belt of loan to value, of debt coverage ratio, of looking at the assets and the borrower a little bit tighter because things are just getting a little bit different than where they were before?
As we look at lending on properties, you do a great examination of the leases that are in place. Do they have maturities of all in 22, 23, 24, or are they out 5 years from now? And from that perspective, you have to imagine that the earning capacity of that property may decline as those leases mature.
Yeah.
And so we have to anticipate what the cash flow of those particular buildings will be, which pays the loans, which makes it a nice earning for the property owner as well. But we have to look from a perspective of what's going to happen and how will it affect the repayment schedule of any loan that is agreed upon.
Yeah, and it's interesting because that cuts both ways. And what I found is that if you have an industrial building where the rents are very low and the market rates today are very high, then the role of the lease actually would provide additional value. While there might be cost to get a new tenant at that higher number, the end result might be just fine and you'd be better off. Whereas on the office side, if you have old leases at yesterday's number, the lease is coming up, the tenant moves or renegotiates because that sector is softer. Now you basically have a declining value in the asset because you have to reset at the lower number, which is what I'm hearing you say. And I think that's prevalent now more so than before. Nobody really cared as much. I don't want to say they didn't care, but they didn't care as much.
One ingredient that you're not mentioning, and that takes me back to when in 2020 a lot of folks went home and are working online.
Yeah.
They're not returning to the office space. And what you're going to see, or what we kind of anticipate, is that the office that you used to go to is now going to be shared with 2 other individuals. And so that one office is going to be visited by 3 individuals because 2 are working online and 1's going to come in the office.
Yeah.
And so consequently, now you had 10,000 square feet and you only need 3,000 square feet, or
5
something,
or whatever, right.
Something less.
Sure.
So are you going to have the same earning capacity in relationship to that? You now need to find new tenants that could draw the price per square foot into a lower value as well.
Oh, and then you have supply chain issues, inflation, construction costs way up. So when you do go to do improvements for that next guy, or even do renovations for the existing guy, you're just spending a lot more money than you used to.
Construction is a whole other subject that kind of moves around as well. I was talking to just a gentleman in Santa Barbara here last week who handles what I call a rehab type of environment in construction. And during 2021 and in the beginning of 22, he had focused in jobs for the next 2 years. Now he's getting to the end of 22, and instead of having 13 jobs scheduled, he has 3.
Yeah.
So what that's is telling you is no, all the jobs didn't dry up. It's just that all of a sudden folks are saying, I'm going to wait. I'm going to play off that a little bit. Let's let the prices come down.
Yeah.
Let's renegotiate and refigure this out. And maybe I don't need to change all the windows in the house. They only lasted for 30 years. Maybe they'll go another 1 or 2.
Right. And the same applies to the
Right.
roof and the asphalt and all the other components,
True,
right?
just
the
simple pieces.
And the people on the residential side, I'm going to remodel my kitchen. I'm going to remodel my bathroom. Hey, I'm just leaving it, right? And so all those vendors that then had all this backed up work, and the handymen and the plumbers and the tile guys, it starts to get compressed.
It gets compressed, and it will take somebody who's earning, I'll just say $25, just to pick a number. Now they're going to have to start charging $20 or something like that.
Yeah.
So that's going to gradually affect every piece, and everybody will, they get along by doing a little bit less because we've been having so much fun.
Yeah. and the run up in the wages, which is a whole another show as well, is a whole different dynamic also, because at the moment you do have unemployment at all-time recent lows. At the same time, it doesn't sound like you do either, believe that's going to last.
It never lasts always.
Yeah.
That's true.
Nothing's forever.
Yeah, we don't want to go into salary talks.
Yeah, no, we don't. Neither you nor I. So let's shift gears for a little bit. We only have a few minutes left. I told you it would go fast, and it's going pretty fast. And so I want to get your perspective in terms of just on a high-level basis, because you're dealing with that from your own position in running the bank. What things keep you up at night, and what do you think is the biggest factor going forward that will have an impact on the economy going into 2023?
My constant concern is how to manage and protect our depositors' funds. We focus on that day in and day out. I'll say that we do an outstanding job. Our security portfolio is one of the top ranked security portfolios across the United States. Our real estate lending has just been measured, and it is at an excellent level as well. So those things are really positive to me. And if what that allows is that if we have a real estate market that's declining, and we have individuals that are running short of cash, that I can have a lot of patience in relationship to those repayment of loans. Those are my worst dreams, so to speak. And I'm happy to report that we're in excellent shape. Our borrowers, our depositors are all in excellent shape. So that from that standpoint, we stay as California's strongest bank. I think that I'm always concerned with protecting our employees of the bank in relationship of you get up each morning and you say, we have 800 employees. I'm responsible for not 800 employees, but 800 families. And again, protecting the bank, protecting the depositors, those things are really important. And then there's shareholders, but we can talk about that another day.
Right. And do you think that the midterm elections will have any sort of dynamic effect on either the perception or what happens in the economy, or will it just take some time, even if there's new policies that get put in place?
I'm really hopeful we have a rebalance in relationship to the midterm elections. I think that if we can get some controls on the spending that has been going on with our government, if we can get some controls in relationship to what they're going to continue to fund or not fund, then I think that'll rebuild the economy slower, but it will rebuild it stronger.
Yeah.
And so that's what I really want to see.
And from what you're hearing in the banking industry, I'm curious your input. I hear banks have money. We want to lend. We're just being more careful. And unfortunately, it's at a higher interest rate, so there's less people to talk to.
True. The interest rate, types of interest rate are changing. For so long, it's been fixed interest rates. Now we're going to a lot of variable interest rates. So we can see that coming back into play. So there'll always be a certain risk of loan that has to be a variable rate loan, and there'll be risk-related loans that are fixed-rated loans.
Yeah.
So both of the products are going to be available in relationship to the strength of that particular customer.
And do you find that the customer prefers longer or shorter fixed rate loans if there is a fixed rate, and conversely, what happens to the bank? I mean, it seems like if it's going up, if I'm the bank, I kind of I'm happy to have a recheck in a couple of years because I think it might be higher. If I'm the borrower, maybe I can come back if rates come back down and I get a better deal, and nobody knows.
It's important as a business structure of banking that you do hedge in relationship to your interest rates, and that you get to market the same way you do in leases and so forth. So by marking to market in relationship to loans every 5 or 10 years, then that's how you play the game at the bank. Then you don't get caught in these big swings of interest rates like what we're having right now.
Sure.
Today the swing is so fast. It is really hurting banks' ability to stay up with it, because we have the largest parts of our assets already invested. So
Right.
I mean,
And they're at yesterday's number.
right. And if you go to sell those with the low interest rates, now you have to sell them at a discount, logically.
Right.
And we're not doing that. We're here. We hold our assets. The loans we make, we keep on our portfolio. The securities we buy, we don't have any for sale. And so consequently, from that perspective, we're protecting ourselves, but yet we're now going to have to move along at earning a little bit less, which is part of the business. Because on the other side of it, back in when interest rates were declining, we had a higher interest rate, so we got the benefit that day.
Right.
So it goes both ways.
Yeah. I mean, it's a constant swing and it's a challenge, and I guess it's just you got to go through it on a day-to-day basis and take each deal as it comes, and then at the end of the day, you look at it from a global portfolio perspective.
Indeed.
Yeah. So I guess how can folks reach you at the bank? Not you per se, but the bank itself.
My number.
Right. We'll give your cell out later, but
Indeed, I am available at the bank. On our websites, you can get my email address. You can get my telephone numbers. I still answer my own telephone. My secretary, God bless her, she doesn't have to answer every phone call that comes across our desk. But from my standpoint, that's the way we operate. We want you to have our numbers, our direct line numbers. We want you to have our cell numbers. You want us to have our emails. We communicate at every level, text and so forth.
and it's F&M. The website is remind me.
FNB.com.
There you go. And so, in terms of growth for the bank, is there plans to add more branches, or is it really to stick with the real estate dots on the map and then grow those as time goes forward, or a little bit of both?
Orange County is a great commitment for what we want to do. We're going to open an office here this year in 17th and Main in downtown Santa Ana. We think this is just the greatest growing city that's coming along really fast. In late 23, we have another office being opened in Tustin. And also in the early part of 23, we have purchased a building and look to open an office in Laguna Beach.
Yeah.
So these three locations and these three additions will allow the bank to continue to grow in a very structured method and allow us to do our best job.
Gotcha. Well, it sounds like the bank is on solid footing and continuing to grow with a solid pace. And I wish you and your family and the bank and everybody who works for you much continued success. And I appreciate you coming on the show and sharing your thoughts and your views with us. We could go all day, but unfortunately we are out of time. So for those folks out there, I am Barry Saywitz, president of the Saywitz Company. I appreciate you tuning in. I want to give a special thanks to the folks here at OC Talk Radio and Paul and Sophia, our producer. And once again, if it's Tuesday, it's real estate. So thanks for tuning in, and we'll see you back here again next week. Thanks a lot.
Thank you, Barry.
Well, there you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California, Irvine's Beall Applied Innovation Center.